Stand by. We're going live. We're going live. 10, 9, going live. 7, 6, 5, going live. 4, 3, 2, 1.
Welcome to 10 Seconds to Air. I'm Alita Guillen. What is going on with the economy right now? Everything is more expensive. Gas is over $6 a gallon here in California. The grocery store run is emptying my wallet. I'm sure you can relate to that. And on top of all of that, the stock market that was on fire throughout COVID, could do no wrong, is now in a deep dive. Interest rates keep going up, and that's supposed to help, but is it working? And how far will the Fed go to get us back on track? Well, joining me today to unpack all of this and break down what is still to come is longtime CNBC journalist Michelle Caruso-Cabrera. Michelle was CNBC's first Latina anchor and spent more than 20 years covering the world financial markets. She was also their first ever Chief International Correspondent and is now a contributor on international issues with the network. She took a break from the financial newsroom in 2020 to run for the U.S. House of Representatives in the middle of COVID. Can't wait to hear about that. And then ran for New York City Comptroller in 2021. She'll tell us about that, too. She is also the board president of Ballet Hispanico. Michelle is a fearless journalist and political candidate. She does not give financial advice. She just reports on it. She joins me now to talk about what's driving this market, what she thinks caused inflation, and what we need to do to brace for the coming year. Hi, Michelle.
Hi, Alita. It's great to be here.
How was that for a warm welcome?
Thank you so much. It was terrific.
There's so much that you do. I can't put it all in the intro there. So you're gonna have to elaborate. You're busy right now.
Oh yeah, the world is extremely busy because for the first time in like 30 years, interest rates are going up, and they're going up steadily, and it's causing all kinds of disruptions here in the United States and all over the world.
Yeah, it really is. It's just no one probably feels safe or steady or, tranquil right now. It's just not the place. You've been on the air for more than 20 years, doing live reports from all over the world. Fearless, my fearless friend. What goes through your mind 10 seconds before you go on air?
Well, I take a deep breath, first of all, because you don't want to talk too fast. You want to be calm, no matter how stressful the situation is. And then I kind of go over the what is it that I need the audience to know when this is over? What are the 1, 2, 3 most salient points? And, it depends. When I was in local news along with you, we had a lot of video, right? And you'd want to make sure you talk to the video. What video am I going to show? Make sure I describe it, right? So that would be driving what I say. But when I cover business news, there's a lot less video. And instead, there's usually like 3 bullet points that they put on the screen as you talk. And then I'm thinking about, okay, what are the 3 most important things? And those bullet points really are helpful as you're crafting them to think about how am I going to give the most and best information to the audience right now and use it as like a guideline. So I'm thinking about those 3 kind of bullet points.
When you were first starting out, I'm sure that 10 seconds to air was different.
Oh, I was so nervous. Yeah. I mean, the very first time I went live, it was my first live shot. I pretty much fainted afterwards. I had to lay down on the ground. I was so nervous.
Right. Do you remember what the story was or where you were?
It was some kind of crime. Yeah, it was definitely crime. Yeah, right. Because we were in Tampa and we covered either crime or hurricanes.
Yeah. You were either standing in 2 feet of water saying it flooded again in the same spot that you were the last time it flooded, or, right. Gosh, and just to reminisce for 1 second, do you remember that computer? We actually shared a desk. We weren't in the same seat. We had 2 separate seats, but we shared this communal desk between the 2 of us. And there was a huge computer that we would swing around, like the size of a suitcase. That's how I remember it.
It was so enormous, children would laugh to look at it. It would look so, the way we kind of look at old tube TVs, that's what it would look like. Yeah. And the keyboard would swivel. And I'd say, hey, are you done yet? I got to type my script.
I remember.
Just slide it over.
And then you give it a swat, you'd be like, yeah, I'm done. You swat it over and it made a little noise when it turned too. Do you remember that? It did like a click, click, click. Yeah. Oh, wow. Those were the days. Now we walk around with our laptop. Yeah. Kids would be horrified with that. So then you leave. I remember you leaving there. I actually remember you called me and said, I have an interview at CNBC. Do you remember this?
Yes.
You said, like, let's go shopping. I need something to wear.
Yes. Yeah, because, people in New York dress differently than people in Florida. In Florida, you wear bright colors, you wear light colors because you're in the sun. You don't want to be hot.
Yeah.
In New York, you wear dark blue and navy and, so yeah.
Yeah, we went shopping. I don't remember what you picked out. I don't remember what you wore. Do you remember what you wore?
I think it was like a black suit with, and I had a little jaunty scarf for color.
You did. Okay. I probably said, CNBC, what's that? It wasn't on for that long.
It wasn't that old.
Yeah, it wasn't
that old. We had a boss who said to me when I told him I was going, he's like, "You're going to CNBC? That's the white guys and ties network. Why would you go there?" I said, "Because I'm going to be a pioneer. I'm going to, I'm going to be the first Latina there."
Yeah.
I was excited to go to New York.
Yeah.
I couldn't wait.
And why business news? I don't remember having that conversation. Did you have a passion for business at the time? I don't remember that.
My father and my grandfather, I listened to them all my life talking about the stock market. So I was very comfortable thinking and talking about the stock market. And when the opportunity came up, I remember thinking, oh, yeah, I could do that. It's kind of like, I know sports very well. You would be very comfortable applying to ESPN. I would not, right? There's a self-selection process, right? I was very comfortable applying to CNBC because I felt very comfortable about the topic. And I remember calling my grandfather, who's Italian, and only went to the 7th grade, but died a millionaire because he started investing in the stock market in 1929. And I said, "Hey, Grandpa, I'm interviewing at CNBC. He's in Boston." He says, "You are? Oh my gosh, that's my favorite channel." And I was sold. I'm like, wow, I hope I get the job because my grandpa would be so proud of me.
Oh, wow.
And he was.
So he invested in the stock market and he was a millionaire when he passed away?
Oh, yeah. Uh-huh. Yeah, I still have the sheets where he wrote down his trades by hand.
No kidding.
Yeah, he bought 10 shares of Canada Dry for $10 each. That was his first trade.
No way. Do you remember what his big money makers were?
A lot of the auto stocks, because remember, he would have bought auto stocks in the early days of the autos, right? He drove a Ford Model T. So,
oh boy, he wasn't buying electric cars back then, or thinking about that. No. Oh wow.
No, they were just excited with cars.
Yeah, no kidding. Let's do this. Let's talk about what is happening now. I'm hoping that you can explain this. What is going on? I mean, everything is more expensive. You go to the supermarket, it's crazy. Normally I'd go in there and not think twice about what I buy. I do think about it. I don't want any waste. Gas prices, I'm in California, you're in New York. I don't know what they are in New York, but I mean, I take a picture every time I drive by, partly because I drive an electric car and I want to shame all my gas guzzling friends. And I send them a picture of the cost of gas in California. What is it in New York right now?
It's more than $4. California is always the most expensive in the country because they have a lot of requirements when it comes to what's in the gas there. Mm-hmm. But New York is more than $4. The issue here, if you live in New York City, is that it's very hard to find chargers. So you can't really buy an electric car and know where you're going to do it. But inflation is very high right now. The last measure was at 8%, and we went for more than a decade of almost zero inflation. So, if you're, going up every month like that, it starts to get very, very expensive. That's the yearly rate, 8%. We're not used to it.
So what does that number even mean? Like, break that down.
Yeah. So the way inflation is measured is there's what's called a basket of goods. They decide, okay, what is the average kind of family eat, drink, do, buy in a month? What do they spend their money on? And so they measure rents, they measure foods, maybe a dozen eggs, they measure energy, they put that all together, and then they've been measuring it over time, and they say, oh, a dozen eggs cost this much this month, and last month it was only, it was less, and so now we know the price has gone up by whatever percent that is. And they put that all together, and that's what's called the CPI, the Consumer Price Index. And that is the standard measure of inflation in the United States. So that's how we know that inflation is going up, and that's how they figure it out.
And who's they when you say they?
Oh, that is the federal. Well, there's the Federal Reserve monitors it, and then there's the Bureau of Statistics that gathers it. There's a whole process there for figuring out what those numbers are.
Yeah.
But it's a government function.
Okay, and talk about the Fed for a minute, because interest rates, like, they just went up. They're going to meet again next week. It's like every 2 months the interest rate is going up.
Yeah. So, we know almost everything has a price, right? You go to buy a house, it has a price. If you go to buy food, there's a price. Gasoline has a price. Well, money has a price. That's the interest rate. And the Federal Reserve sets the price of money. And they are setting the price of money because they have two goals, two objectives that are mandated by law. They must control inflation, but at the same time, they need to optimize employment. They want the economy to run at a certain pace where, one, there isn't too much inflation, but also where there's plenty of employment. So those are the two things they're solving for. And the price of money, interest rates, can really have a huge effect on those two things. So that's what they're always thinking about.
So, but right now, unemployment's pretty good, right?
It is.
Okay.
It's very good, but inflation is very high. So they always have those two mandates.
Yeah.
Which one are they focusing on? When we have a bad economy, they're focused on raising the number of people who have a job. So getting the unemployment number down.
Okay.
When we have very high inflation, they focus instead on getting the inflation number down.
Okay. And inflation is we've got not enough goods, and we're spending a lot of money. Is that, that's a really layman's
prices
term.
Keep going up every single time. The price, you've seen the price of gas goes up. The price, when things are going up in price, and when they're going up a lot in price very quickly, that's very high inflation.
So we're going to keep seeing interest rates go up until when? What do we need to happen
Until the Federal Reserve believes that they have inflation under control. And they are going to want to see either the CPI when it comes out every month. The last number was prices were showing a rate of 8% in gains. The next time will it be only 7%? That would be a very good sign. That would mean they slow down. If unemployment starts to rise, if people start losing their jobs, it's terrible for people. It's terrible for the economy, but it's a good sign for the Fed. Oh. That means that inflation may start coming down, because when you don't have a job, you spend less money, so there's less demand for goods, so the prices can start to come down. Okay. So those are the things that they're watching for. We haven't seen either one of those, by the way, not yet.
Not at all this year.
There have been some layoffs announced, but unemployment, like you said, is still very low. Okay. And inflation has not slowed down.
Okay. So let's go through the scenario then. So interest rates keep going up because we're not seeing any of this kind of correct. People are starting to pull back a little bit because things are getting expensive. So maybe I'm not going to spend as much. Oh, no, I don't know what's coming. I'm going to hold on to my money. What happens to employment? What happens to the big companies if interest rates keep going up? Do they start laying people off?
Yeah. So right now, the Federal Reserve has set the price of money at roughly 3%. And there are predictions that they're going to keep raising it until at least 4%, maybe as high as 5%, because that may be what it takes to bring inflation down. What happens when the price of money gets more expensive? We can understand it intuitively through housing, right? When you want to buy a house, if the price of money for that mortgage is only 2%, your monthly payment's a lot lower than when it's 7%. Mortgage rates just crossed 7% for the first time in 20 years. So it's harder to buy a house. Translate that to business. It's harder to borrow money to start a business. It's more expensive to borrow money to start a business. It's more, if you run a business and suddenly you're short on cash and you need to borrow, it's more expensive to borrow. Maybe you don't, and instead maybe you lay people off. So that's what happens. And so that's why we should be worried about if you're listening, you have to think about what kind of job do you have, and are you vulnerable to losing your job if we go into a very weak economy because of this.
Now, do the markets follow what the Federal Reserve does, or does the Federal Reserve take a look at the markets? How does that work?
90% of the time, the markets follow the Federal Reserve. There is a long, old phrase on Wall Street: don't fight the Fed. When the Fed is raising interest rates, it hurts the markets for all the reasons that have been mentioned. On occasion, the Fed will look at the market, and if it's rallying a lot, if things are perceived to be really expensive, overvalued, the Federal Reserve may react to that because they may see it as a signal that the economy is getting too hot. Right?
So it's almost like a punishment. They say, "Oh, you guys are, we're gonna change this, change the pace."
Mm-hmm. Yes. Yeah. Well, not that they want to punish people, but they see it as a signal that they're going to have inflation issues elsewhere in the economy, and that worries them.
Recession, that word gets floated around. Are we in a recession? Are we headed toward a recession? What exactly does that mean?
So just like we measure CPI and inflation, we also measure the economy, right? We measure how much do we produce in the economy and what is it worth? And right now the U.S. economy is worth roughly $23 trillion. But maybe it falls to $22.9 trillion. That's a decline. Mm-hmm. When the economy goes down for a total of 6 months in a row, that's generally defined as a recession. That's actually happened in the last 6 months, not by a lot. It's been slight. And so there's been a debate, is this really a recession? Because usually in a recession, a lot more people lose their jobs. Unemployment goes way, way up. And that hasn't happened yet. So there are a lot of people who predict we are going to get more weakening of the economy and that unemployment will go up more. A lot of people think unemployment has to go up a lot before the Federal Reserve is going to stop raising interest rates.
There are some real financial movements that we're going to see happen. Interest rates could keep going up.
Yeah.
Unemployment could go up.
Will go up. Yes.
The cost of money is going to go up.
Yep.
Housing market. I mean, the housing market.
Well, so the housing market usually will go in the opposite direction of interest rates, right? If you are one of the lucky people who doesn't lose your job and has a lot of cash, this could be a great time in the next year to buy a house, right? We're already seeing, there was a huge story in the Wall Street Journal today about Austin, Texas. All these people left California and moved to Austin, and suddenly prices were going up by like 50%, 70%, crazy numbers. People were buying, cash, knocking on people's doors to buy houses. And now that market is crashing. It's falling dramatically, right? Because of rising interest rates. So some people, if they have, a lot of cash, this will be a good time for them.
Right. Because the cost of money.
And there are those people out there.
Yeah. And those people are out there. And you said that a lot of people left California and went to Austin. I don't know where those people are because there's still a gazillion people here in California. I just want to tell you that. Traffic is ridiculous. I don't know what happened, but it's like more people. After COVID, it feels like there's more people here than there were before. And I know a lot of people left, but I don't know. Just want to make sure that I get that out there. How did we even get here? Is there anyone to blame in this?
How did we get all this inflation?
Yeah. How did we get here? Because it didn't happen yesterday. This is, in the middle of COVID, people's stocks were crazy and people were, 30% higher.
There's two big things that have happened. So first, you should know inflation is happening all over the world, not just the United States. And Ukraine, the invasion of Ukraine by Russia. Ukraine produces a lot of wheat. And wheat is what goes into bread, right? So we're seeing food inflation as a result of that. Also, Russia produces a lot of oil and natural gas, which is what Europe uses to run their economy, to heat their homes, to run their businesses. And because they want to punish Russia, and they're not buying their oil and they're not buying their natural gas. And then Russia gets mad and says, oh, you don't want to buy it? Well, we're not going to sell it, right? There in Europe, the inflation is caused by skyrocketing energy prices. Brutal. People are finding their bills going up by 100%, 200%, 300%, huge gains. We produce a lot of our own energy here in the United States, so we've had less of that problem.
Yeah.
Our issue is that there's a lot of looking backwards and saying, you know what, we did a lot of support of our population during the COVID pandemic for good reason, right? We didn't want people to starve. A lot of people lost their jobs. But then there was one final package that they did that even Larry Summers, who is a very famous economist, a very astute, very smart guy, he's a Democrat. He was Bill Clinton's Treasury Secretary. And I'm telling you that because he criticized our Democratic president and our Democratic Congress for the last support bill that they did because he thought it was too much. He said, this is going to cause inflation. Don't do it. And it was huge. When a lot of people had a lot of money that they didn't have before, they could be picky about jobs. Employers had to start raising wages to attract employees. So you got this spiral going, an upward spiral. And then that leads to people demanding more goods and spending more money, and it keeps going and going. I get why they did it, because there are a lot of people still hurting, but, you know, Larry Summers thinks they went too far.
Yeah.
And maybe he was right when we see what's happening.
Had they not done it, would probably be having a different conversation about people who are struggling or unemployment, or like there'd be another problem.
Right. The counterfactual is impossible to know, right? Yeah. It's impossible to know the counterfactual.
Yeah. You mentioned the rest of the world, and I'm so curious about that as far as how does our inflation compare to other parts of the world and their inflation?
Europe's is much worse. Europe's is much worse than ours because of the energy. Because imagine if you're worried about heating your home. Yeah. Like, are you gonna be able to? Or some countries are worried about even having enough gas. You might be willing to pay for it, right, but maybe they can't provide it, right? The one place that doesn't have a lot of inflation is China. And it's because they've done some very extreme things. They're still putting parts of the country into lockdown. Because they want to have zero COVID, and they claim they have zero COVID. You can't believe a lot of the statistics out of China, but it's causing a massive slowdown in their economy.
So they're not experiencing the inflation that we're experiencing, or the issues.
No, to your point, they're experiencing a different problem, which is, people with college degrees with extremely high unemployment rates that we haven't seen in this country in a very long time. Yeah.
Right. So what do you do? Like, how do we navigate it? What's the average person? What can we do?
Yeah. So the individual, first of all, you should assess your own personal risk. What risk are you at in the coming economy? Are you working in anything related to the housing sector? Are you in the mortgage industry? You need to think about what are you going to do instead, or do you have enough cash put aside? Are you in the construction business, or in the housing construction business? Are you in California, they got a lot of startups that are funded by venture capitalists. So if you're an investor, when you're trying to figure out where to put your money to invest, maybe you put it in a company that's growing. Except now when you're an investor, you have different choices. Back when interest rates were extremely low, if you put it in a bank, you got 0%. So sure, let's invest in a venture, in something risky because at least maybe that'll grow. But now you can get 4, 5, or 6% at a bank or in a CD. So now you think a lot more about, why would I take all that risk on a startup? Yeah. When I can put it safely in a government bond or in a bank. And so if you're working at a company that is speculative or lives on that kind of money, you have to worry about whether or not you're going to get the next round of funding, that kind of thing.
Okay, so you mentioned bonds. Let me just touch on that for a second, because that's usually where people will go to be safe. But right now, not the case, right? What's going on there?
Yeah. So traditionally, when you have, a very kind of standard portfolio, you're, in your 20s, 30s, 40s, or 50s, or 60s, or whatever, you put some in stocks, and some in bonds. And the idea is that the stocks are risky and the bonds are less risky. But bonds have been going down. And that's because when interest rates go up, the bonds that you used to have that maybe when you bought them, they were paying 2%. Well, now you don't want a 2% bond anymore because now you can have a 4% bond or a 5% bond. So those old bonds, they go down, people sell them. So they go down in value because people are looking for newer bonds that pay more. So that's why bonds have been falling because people are looking for, but you can buy, like there are government bonds. You can buy a US government bond. It's 2 years long. It's called duration and it's yielding more than 4%. And that's, I feel very confident that the United States government will pay you back at the end of those 2 years and give you back the money that you lent to them for those 2 years. So those are investments to think about right now if you're nervous. Like if you're very, and the other thing to remember is that, speculative companies that, if their profitability is predicted to be sometime way in the future, those companies get hit really hard when interest rates start to rise because people think, why would I take a risk on that company when I can just buy a U.S. government bond and it'll pay me 4% and I'll sleep better at night?
Yeah. And then those companies may not be around because if people start running the other way.
Exactly.
It's super risky. Oy, oy, oy. Okay. Well, you've been covering business news for 25 years now. Has it changed? Has it changed a lot? Has the industry changed? Has Wall Street changed?
Yeah, when I first started covering Wall Street, I would go down to the New York Stock Exchange. There was only one bathroom on the floor of the New York Stock Exchange. It was only for men. Oh,
get out of here.
Because they had almost no women.
So when you got there the first day, you said, where do I go to the bathroom? And they point you to...
Yeah, and they said, to the elevator.
Really?
Yeah. Oh, yeah. Go to the elevator. And
so that's changed. Come on, that's got to change.
Yeah. There's trading desks. You walk onto a trading desk at a company, and it was almost all men. That's changed. There's a lot more women working on Wall Street. That's great. And it's also much more international, the coverage. When I first started, I told my producer, I think we should do more international stories. And he said, okay, we're going to do one segment every Tuesday for 4 minutes, and we're going to call it Beyond Our Borders. And that was the only time we talked about foreign stocks or foreign economies.
You're kidding.
No. Now, of course, we talk about China and Europe. We talk about, because we have a much more global economy than we did back then.
Wow. Okay. Wow. I got to back up for a second because there was something that I forgot to ask you here. The timing of how long all this will last. How long do you think we're going to be hunkered down and paying attention to this?
So that's the great sport on Wall Street right now, is trying to figure that out. So I told you right now that the Federal Reserve has set their price of money, the interest rate, at roughly 3%. Like I said, their predictions, it's going to go up above 4, maybe to as high as 5. That's going to take them at least 6 months, maybe 8 months to get there. And then we wait to see if that's affected inflation. The last time there was a big inflation flight, it took more than 10 years. We had inflation in the 70s. They thought they had stopped it by raising interest rates. They lowered interest rates and boom, it came back. Yeah. Right. So then they tried again and they went even higher and they thought, okay, we've done it. And then they stopped raising interest rates. They lowered them. Boom, the inflation came back. I mean, it took a long time. It got to the point. So I'm talking about 3% inflation and maybe it'll go to 5%. I mean, I'm talking about 3% interest rates and maybe the Federal Reserve will raise them to around 5%. Well, back during those times that we're talking about, they went to 20%.
Wow.
20%. We don't think that they're going to have to go that high. But, just remember, it can often take longer than they think.
Wow.
So it could be a couple of years.
Were there signs like, should we be surprised? I don't know.
No, we didn't have inflation for decades. So, you get used to living without it. I think it's worth saying why it's so important that they fight inflation. And having covered for example, Latin America and places like Turkey, if you don't fight inflation, it starts to really cripple the poor in particular. I've seen in Latin America when they don't fight inflation and they start, people have to buy, you go to the store now and you buy a bottle of canola oil or olive oil for cooking, you buy a bottle of it, right? Well, when inflation's really bad and you don't have much money, you start buying it by the capful on the streets, right? Because that's all you can afford because inflation is so bad and your wage isn't keeping up with what's happening with inflation.
Yeah.
So it's super important. I know people say, well, they're causing job losses. Yes, they're going to end up causing job losses, but it's because inflation, when it's out of control, is even worse. It's even worse.
Do you see people paying more attention now in business to business news or the financial health of the world than they were like 25 years ago when you were getting into the business?
Oh yeah, I mean,
why?
Yeah. I think a lot more people realize that they own stocks because they have a 401k or they have a pension fund, or if you're in a union, you have a pension fund which has exposure to the stock market. I mean, people are much more. I mean, when like we said earlier, when I went to CNBC and my boss said that's the white guys and ties network, and nobody knew anything about it. Now, many people pay, they know about Facebook, they know about Amazon, they know about Yahoo.
Yeah, right.
These are all publicly traded stocks. I really saw it when I was running for office the first time. I announced I was running for Congress in February of 2020, and then the pandemic hit in March of 2020. And it was incredible. I was in Queens running for office. That's one of the boroughs or counties that makes up New York City. And it's one of the poorer boroughs. And the area I was running to represent is filled with immigrants. There are more than 150 languages spoken in this area of New York City. And there are many, many immigrants who are, were in the jobs that were most likely to be affected, cleaning hotels or working in kitchens or working in nail salons. Those, all these service jobs that are, where you have to meet with people. This is not the laptop class, right? And they were so desperate for money, for food, the food pantry lines. Catholic Charities, Alita, started all of these food pantries. We already had an extensive system within the city and demand went up dramatically. I would see hundreds and hundreds and hundreds of people in line, mostly immigrants from Central America, parts of Asia. And all they wanted to know is when could they get back to work? So yes, people absolutely were so focused on and are still focused on what is happening with the economy. When are things going to settle down, because it's been so tumultuous for the last several years.
Yeah. So that brings us to you running for an elected office. Wow. What a change for you. You went from business news, or maybe it wasn't. From what it sounds like, the economy was a hot topic. And so maybe you felt like you were diving in, into something else.
Well, absolutely. Having been a business journalist for most of my career, absolutely framed the way I looked at how I should run for office. I wanted to run on a platform about bringing more jobs to the Bronx and Queens. That was my number one message. And especially once the pandemic hit, getting people back to work once it was safe to do so. So that was the message that I talked about a lot. The reason I got into the very first race was that Queens, part of New York City, where I was running to represent, was supposed to get one of the Amazon headquarters. Remember that big competition that Jeff Bezos had for Amazon headquarters number 2? Well, guess what? Queens in New York City won. And then the congresswoman that I was running against was very critical. She didn't want them to come to Queens, and they decided not to come. And it was really devastating. It was supposed to be 25,000 jobs coming, more than $20 billion in tax revenue. And so when we lost that, that was kind of my motivator. wow, this was so bad for New York City and for a part of New York City that really needed more jobs. The Bronx and Queens need more jobs. Manhattan, which is what most people think of when they think of New York City, the Empire State Building, Times Square, the Metropolitan Museum of Art, those are all in Manhattan. But there are millions and millions of people who live in Queens, in the Bronx, in Brooklyn, and they are not as wealthy as Manhattan. And so, it was very, very frustrating to have lost the Amazon headquarters. And that's absolutely why I ran for office.
Yeah. Well, you brushed over who you ran against. But I think we need to pause for a second and bring that up. I mean, you ran against AOC and MCC against AOC. That was very cute. You were going after someone that was, kind of a big name in Congress. Why?
Kinda?
Why? Yeah. Why?
Yeah,
kinda.
Well, I was very motivated because of what happened with Amazon.
Yeah.
And it was very interesting to, one Latina versus another Latina. El Diario, the newspaper, wrote in Spanish. I'll do it in English.
Yeah. Who
Who needs a novella when you've got this? It's very funny. But I guess I wanted to make the point that, I'm a Latina too, and I believe in bringing jobs to New York City and not driving them away. I mean, it really upset me. I can't tell you how many people were so angry about it. And it was one of the reasons why people supported me in that race. One thing else, since we're talking a lot about the economy and money, money matters in an election. She spent $10.2 million in that election against my 2.7. She spent more in the month of June than I spent in the entire race.
Oh, maybe she was a little nervous.
She was $1.6 million in attack ads in the final 4 days. So, when people talk about why are politicians focused on money? Well, when you're running in New York City, you need to run ads and they're very expensive, and when somebody can literally outmoney you, it really can help drive the outcome of an election.
Did you meet with her at all? Did we ever face to face?
We debated once in person. And then we debated twice over, like a Zoom format.
And where do you think you really ruffled her feathers? Because you must have gotten to her if she started spending that kind of money.
Yeah, we highlighted the fact that she's almost never in the district. When she ran for office the first time, she complained about the previous person who held the office, saying he doesn't drink our water, he doesn't breathe our air, his children don't go to our schools. That was a pretty compelling line. Well, guess what? Once she got into office, she's, stayed in Washington, and she wasn't very present in the district at all. She also was not drinking our water or breathing our air. And in fact, during the pandemic, when nearly every other legislator was opening up their office for distributing food, distributing masks, hand sanitizer, that's what I did during the pandemic. She stayed in her apartment in Washington, D.C. and pretended that she was actually in New York City, because you can't tell on a Zoom against a white wall, right? And she said once during one of these Zooms in very bad Spanish, she doesn't speak Spanish well at all. She says, "Hola, mi gente, aquí in el Bronx and Queens." And she was saying, "Hi, everyone here in the Bronx and Queens." And she wasn't in the Bronx and Queens. She was in Washington, D.C., and we could tell by the trim of her apartment. So, we called her out on it. She came back on a train at midnight. And we know that because she posted a photo of her dog on Instagram, like at 1:00 in the morning, coming back to New York City, and finally coming back to the district and showing up in the district where there were hundreds of people dying. That's where 13 people died in the hospital in one day. And she wasn't here for a good chunk of it at the beginning until we said, "Where are you?" Yeah. So I feel good about that. Made her come back and actually do something.
Right. I would ask you if you would run again, but you did run again, not for that same seat, but then you went and you ran for comptroller for New York City. What, a year later?
Yep. That was the chief financial officer of New York City, which is an elected position in New York. In other cities, it's appointed. Absolutely. I got 150,000 votes in that race. I got more votes than Andrew Yang, who was running for mayor, and he had $7 million and I only had $2 million. So I did very, very well. I came in 3rd out of 10. I doubled the vote count of the person that was behind me, who came in 4th. And I beat 3 sitting elected officials people were shocked at how well I did. But I think it's also because, we have a huge Latino population here in New York City, and there are still not that many Latinos running for office, especially for controller. I would often do, debates or forums with all of my other competitors, and I would be the only woman.
Yeah.
Right. I sent that photo off to Wellesley. Like, look I'm the only woman in this picture, these like 8 people, and I was the only Latina.
So what have you learned by running for office?
Well, I learned so much about New York City and how committed I am to public service, how much I love New York and how much I love New Yorkers. I learned how important it is to communicate even more effectively than when, you're a reporter where you think, oh, we really think so hard about communicating, but you have to be even tighter, more precise in your messaging to make sure that people understand what you're about.
Were you ever misunderstood?
No, I think I was very disciplined. That's a phrase you'll hear a lot in campaigns. Are you disciplined? Like making sure you're very clear what you're about and what your top priorities are. You got to say them over and over again because people don't remember unless they've heard it a couple of times.
I remember seeing pictures of you or videos of you on Instagram on a fire escape, like you were hanging out the window or something, or standing on a fire escape.
Yeah, I was on a fire escape because that was the middle of COVID and we hadn't recorded my ad yet, my TV ad. And then we couldn't record a TV ad because we were worried it was too dangerous for the crew and everyone. So I took up my iPhone and I set it up on a tripod and I literally climbed out my window onto we jokingly called it the balcony, but it was a fire escape.
Right.
And I would record all my videos myself for my ads and stuff. Yeah.
Wow. Incredible. Mm-hmm. What an incredible time. And what a time. I mean, you said in February, so it was before COVID that you decided to run. That
I announced. Mm-hmm.
Yeah. And then COVID hits and now you must have been thinking, what am I doing? Did you ever think about pulling out of that race?
No, I never thought about that. I thought, wow, this is going to be much harder than I thought. It changed the campaign dramatically. Normally you're going from campaign event and campaign event. And now you're doing mostly Zooms and this is what I spent a lot of my time doing. Where can we get masks? There was a shortage of masks. Can we source masks anywhere? I had a lot of connections in the business community. I was able to get hand sanitizer that we gave to hospitals, that we gave to pantries, that we gave to elderly, that we gave to assisted living facilities and nursing homes, helping to distribute food that was so needed. So it became a very different campaign than we expected. That's for sure.
Mm-hmm, mm-hmm. So would you run again? Is that in your future? It sounds like you really enjoyed both these races.
Yeah. I'm very committed to public service. So absolutely, the right race at the right time. Yes, definitely.
Nothing you want to announce here? Come on, give us a...
No, you don't know yet. You gotta wait for the right moment.
This has been an incredible education on what's going on with the economy. What, if anything, should we be doing at this time?
Be prepared. Things are going to get rough, but know that this too shall pass. So just stay calm. The Federal Reserve knows what they have to do. The other part of the government, the White House, most of Congress knows that they shouldn't be telling the Federal Reserve what to do. We have an independent central bank. That's what the Federal Reserve is. And that, this too shall pass. The thing to remember is that when we're on the other side of it, we're all going to be much better off as a result of having gone through this.
Why do you say that?
Because you can't have rapidly rising prices. It really starts to, ruin an economy. You start to worry about becoming Venezuela or Turkey or Argentina or places like that. We can't let that happen here. And they're really aware of that. So it's going to be tough, but what we're going to go through is better than what we would go through if they didn't act.
Yeah. Okay. Well, that's good to keep in the back of our mind. And the prices that we see now as things are increasing, will they stay at that price and then it becomes the norm. Like 2 years from now, is my $6 cup of coffee unbelievable?
Still $6.
Yeah.
That's a good question. I think it's easier to think about in gas prices, or in natural gas prices, which swing a lot. Not necessarily like commodity prices, so natural gas is a commodity, oil is a commodity, coffee is a commodity. Those can fall in price, right? So we can see gas prices. In my lifetime, I've seen gas prices go from $1 a gallon. When we lived in Tampa, they were $1 a gallon, up to $5 a gallon, back down to $2 a gallon. They can swing a lot. Not necessarily.
Oh, okay.
Not necessarily. Things can come down in price. And remember also, technology helps prices come down. The first computer was extremely expensive and did almost nothing. Our phones cost less than that first computer cost, and they do way more than that computer ever did.
Yeah. Well, that is so positive, Michelle. That is so positive. Anything I didn't ask you that you wanted to talk about that I didn't mention that we left out of this?
No, I think you did a great job.
Well, thanks.
Yeah.
You did a great job too. Thank you for educating all of us. I love it. And I hope you come back again.
I would love to.
Awesome. All right. Have a great weekend. And
you too.
we'll be watching you on CNBC.